US rate cut expectations grow. Australian wage growth is strong, but that shouldn't worry the RBA. The Bank of Thailand cuts rates, and there's another tentative sign that the worst could be over for New Zealand's economy. That's coming up in our 5 Things in 5 Minutes on Thursday, August the 14th. And in our deep dive interview, ANZ Economist Krystal Tan analyses the implications for Thailand's economy from recent political turmoil.
Well, this moment could reshape Thailand's political trajectory.
But first, in 5 and 5 with ANZ, US markets were supported overnight by growing expectations the Fed will cut from September. Yesterday's July inflation report and comments from the US Treasury Secretary have spurred on markets to fully price in a 25 basis point cut next month. Here's ANZ economist in London, Bansi Madhavani.
Treasury Secretary Besant came out saying that the Fed should consider a series of rate cuts from here on, starting with a 50 basis points in September. That may be a stretch right now based on our read of data. Our view is that the inflation report does support resuming rate cuts in September, but we think the Fed may well start with a 25 basis point move. The full impact of tariffs is yet to reflect in consumer prices, and so far, the steady unemployment rate allows the Fed to proceed cautiously with rate cuts.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.1% and the Nasdaq was flat. Those growing rate cut expectations saw the 10-year US Treasury yield down 5.5 basis points to 4.236%. Gold was up 0.2% at $3,404 an ounce. West Texas oil futures down 0.9% to $62.59 US a barrel. The US dollar index was down 0.3%. The Aussie dollar overnight up 0.2% to 65.41 US cents. And the Kiwi up a similar amount to 59.72 US cents. Number 2, Australian wage inflation of 0.8% in the June quarter matched market expectations, with the annual rate of 3.4% slightly above the Reserve Bank of Australia's estimate. ANZ economist Aaron Luck says individual agreements drove the growth in the quarter.
I think looking forward, we do think that public sector agreements and award decisions, including the work that the Fair Work Commission is doing on gender-based undervaluation, we do think that's going to be driving the WPI. In particular, we do already know that the pharmacy industry awards will see an increase of 14% over the next 3 years or so. So we do think that's going to add a bit of volatility. But overall, as a whole, I think that both the RBA and ANZ expect wages growth to ease from here.
Number 3, Australian housing lending rose 2% in the June quarter, in line with expectations, after a fall in the first quarter. ANZ senior economist Adelaide Timbrell says rising house prices are leading to increasing average loan sizes.
There was a revision upwards of the Q1 data from a negative 1.6 to a negative 1.2. So I would say the overall picture was a little stronger than expected. In annual terms, it was a 7.2% rise, and this came a lot from increases in average loan sizes. So we saw particularly in WA, Queensland and South Australia, there are actually double-digit increases in average loan size over the last year.
Number 4. There's another tentative sign from New Zealand that its economic slump in the June quarter has bottomed out, with retail card spending increasing slightly in July. ANZ senior economist Matt Galt says higher prices were a factor, but at least there wasn't another fall.
It still looks pretty subdued at the moment, given the data we've seen over the last few months and going into July. Eventually, we expect a pick-up in household spending in New Zealand, driven by lower interest rates as people roll on to lower mortgage rates as fixed terms come to an end, and a bit more easing from the Reserve Bank, where we expect the OCR to come down to 2.5%.
Number 5. The Bank of Thailand's rate-setting committee voted unanimously for a 25 basis point rate cut to 1.5% yesterday. ANZ economist Krystal Tan says that's a change from previous rate cuts, where there were at least 1 or 2 dissenters.
This unanimous decision suggests growing alignment among policymakers in response to deteriorating credit conditions, subdued private consumption, and also the growing pressure from US trade policies. Notably, the policy messaging kept the door to further easing open. So while the Bank of Thailand recognizes its limited policy space, it was also clear that monetary policy needs to stay supportive to help the economy. So overall, we are still maintaining our call for at least one more 25 basis point cut in 2025, and that's going to bring the policy rate down to 1.25%.
Krystal Tan there, who we stay with for today's deep dive interview. I spoke to Krystal about the decisions that the Thai Constitutional Court faces about the future of the currently suspended Prime Minister, with the implications for Thailand's economy.
Well, the court has two main options. First, it can reject the allegations and reinstate the Prime Minister. This would then allow her to resume office, but her political standing may remain fragile because her approval ratings have actually dropped quite significantly, and it's unclear if her coalition partners may reassess their support. Or the court could find her guilty of ethical misconduct, in which case she would be disqualified from office. The Parliament would then need to vote in a new Prime Minister. And specifically, the new Prime Minister needs to come from the list of candidates that were approved in the 2023 election. So that process could in turn either restore stability if a consensus is reached, or lead to political paralysis if parties can't agree on a successor. On top of that, the Prime Minister also retains the option to resign voluntarily before the court verdict is delivered. So far, she's denied any intention to do so, but this could yet be an option, as resignation would end the case and help her avoid a political ban.
So for those people who are outside Thailand and wondering what is it that the court is making a decision on, what is it that's brought this case before the court?
Yeah, so the allegations stem from a leaked phone call between the Prime Minister, the Thai Prime Minister, and the Cambodian Senate President, and this is in relation to border disputes between the two countries that started earlier in the year. Now, following that leaked call, Thai senators petitioned to the Constitutional Court requesting the court rule whether the Thai Prime Minister has breached the Constitution on ethical grounds. So on the 1st of July, the court accepted the case and suspended the Prime Minister. And on the 4th of August, the Prime Minister submitted her formal defense. So the case is now approaching a verdict, which is expected to be delivered by September.
And looking at why this is a critical turning point for Thailand and its economy.
Well, this moment could reshape Thailand's political trajectory, because if the court rules against the Prime Minister and the Parliament cannot agree on a successor, then we could end up with a situation where, the House is dissolved, see a snap election, and even extra parliamentary intervention cannot be ruled out. Because at this stage, coalition dynamics are fragile, public trust appears low, so the outcome is going to determine not just who leads Thailand going forward, but also how stable the government will be going forward.
And looking at how that instability might affect Thailand's budget.
One concern here is about the timing, right? Because currently the fiscal year 2026 budget, it's awaiting the final approval from Parliament. This is supposed to be scheduled in August. But if the court delivers a verdict that leads to a parliamentary dissolution before the budget is passed, then that bill becomes invalid. Then that's going to force the government to operate on a provisional budget from the 1st of October. That's going to delay spending and investment. And we saw what happened with the fiscal 2024 budget delay. That did hurt growth.
Krystal Tan there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, August the 14th. Catch you tomorrow with analysis of today's Australian labour market data, which ANZ Research expects will show unemployment holding at 4.3%. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.